If you own a property personally, maybe an investment or premises used by your business, you might be wondering whether to transfer it into a company. It's a question we're asked all the time, and while there can be good reasons to do it, it's not a step to take lightly. Hi, I'm Jack from Attwells Solicitors. In this video, I'll explain why people make this transfer, what the legal process looks like, and the key tax and practical points you need to be aware of. There are a few common reasons. For some, it's about tax efficiency. Companies often pay corporation tax rather than income tax on rental profits, which can sometimes reduce your overall tax bill. For others, it's about liability protection. Holding property in a limited company can separate your personal assets from your business risks. And for growing businesses, it can also make sense to own a premises for a company rather than as an individual, especially if multiple people are involved in the ownership. But, and this is important, it's not always the right choice. That's why it's essential to take legal and accounting advice before making any move. Transferring a property isn't as simple as just changing the name on the title. In most cases, it's treated as a sale for tax purposes, even if you're selling to the company that you own. That means there could be stamp duty land tax payable on the transfer value, capital gains tax if the property has increased in value since you bought it, and potential mortgage or lender consent issues if the property is charged. You'll also need to consider how the property will be financed once inside the company, for example, through a director's loan or a commercial mortgage. Working with your solicitors and accountants together ensures you don't trigger avoidable costs or delays. The legal side of transferring a property into a company is fairly straightforward, but it needs to be done correctly. We'll start by reviewing the property title and any existing mortgage conditions. Then we prepare a transfer deed setting out the details of the transaction and the agreed value. If there's a mortgage, we'll liaise with your lender to obtain consent or arrange for the loan to be replaced with a new company mortgage. Once everything's agreed, we'll complete the transfer and register the company as the new owners at the land registry. We'll also coordinate with your accountant to make sure the value recorded matches your tax and company records. After the transfer, the company will own the property and receive any rental income. That income will be subject to corporation tax, and you'll be able to take profits out via dividends or salaries depending on your structure. There are also ongoing legal and administrative accounts and property management responsibilities, so it's important to keep those in mind. The key is planning. When the move is right, it can offer long-term flexibility and tax benefits, but only when the details are handled properly. So if you're thinking about transferring a property into a company, take advice before you act. At Attwells Solicitors, we work closely with business owners and accountants to make the process smooth, compliant, and tax efficient. We'll help you understand your options, handle the transfer, and ensure everything is properly registered. Visit attwells.com to learn more or contact our commercial team today for tailored advice. And don't forget to subscribe to our YouTube channel for more straightforward legal insights like this.